Really, Mary?
He beat me to the punch. I'm Mary Bartis of the Bartos Group of Premier Plus Realty, and you have tuned in to Really Mary. Now, Peter, you're going to have to say you're really Mary again because everybody says it a different way.
Really, Mary?
I love it. I love it. So with me today, my guest is Peter Prodnov, Finance of America Mortgage, lender here in Southwest Florida. And, you know, it's the topic of everyone's mind, Peter, because money has been so affordable, cheap as a word, right? And so talk a little bit about, because, you know, we still have a number of cash offers, and cash is king, don't get me wrong. But if you're going to get a mortgage, which you might want to with your cash, right? Yeah. Tell a little bit about what's happening today in September of 2020.
Well, I mean, rates continue to stay low. You know, depending on the day, we're seeing rates down into the high 2%, under 3%. You know, I've got a lot of clients who are doing refinances, and our company is having kind of an internal refinance special. We want to try to capture as much of that business as we can. So we're having reduced pricing, which in turn brings better rates. But we've been floating kind of in between this, an eighth to 3/8% range over the last however many months. It'll fluctuate. It'll go up and down and up and down. A couple of weeks ago, we lost a quarter in 2 days, and you got a little back, it went back down, and now we're seeing this morning it's a little bit better again. So a lot of it is dependent on the stock market, obviously. If the stock market is doing well, the rates tend to go up. If the stock market is doing poorly and we see another dive in the stock market, which a lot of people think is going to happen at some point, we'll see the rates go down, because when that money leaves the stock market, it goes into other things, and one of them is mortgage-backed securities. So that's kind of what we're seeing. And I tell you what, with how the market has been doing, if you can get your money at 2.875 or 2 3/4, you'd kind of be silly to pay cash and put it all in the house, because you're not making money on that money. The house is going to appreciate regardless of if you have a mortgage or not.
It's funny that you say that, because, the ability to maybe buy cash and then refinance it quickly. Talk about that, Peter, and maybe some of the products you have if somebody wanted to go down that path.
Yeah, I mean, if you want to do a short close or a quick closing and you want to pay cash and you want to have a 10-day close, you can come back and do what's called delayed financing. As long as you do it within typically it's within 6 months of that purchase contract. We can do everything based on the purchase price and the loan to value off of that, and get you some of your cash back, typically about 80% of it, up to 80 or 75%, get you your money back, so that you can do what you need to do with it and invest it and make money on that money. But so that is something to do if you're not in a hurry. It's always easier to just do a regular purchase finance transaction, and 30 to 45 days is about all we need. So we're not one of those lenders that are going out 60, 75 days.
That's awesome. For a lot of the folks here, jumbos are back, right?
Yeah. I mean, last time we spoke, it's a couple months ago, the jumbo, we only had one jumbo product. Now, where we used to have 12, now we've got all of those back, plus we've got a couple new ones out on the market. And one of them in particular is a fantastic product. It's a jumbo loan, but we run what's called a Fannie Mae desktop underwriter program. So the guidelines are based on Fannie Mae's guidelines, except for the loan amount. It has to be over the conforming maximum. So we can run an automated underwriting system, get in and approve, and then what's called an ineligible, because it's ineligible because the loan amount's too big. But we can go off of those guidelines instead of, so there's sometimes they're not, this particular program doesn't have all the, I guess, the teeth that a normal jumbo program will have as far as underwriting guidelines and debt to income ratio maximums and higher credit score requirements and things of that nature.
I love that. I love hearing that those products are back and then some, because, and remind everybody what loan amount is for a jumbo loan.
Okay, so the conforming maximum, which would be a Fannie Mae, Freddie Mac type loan, your cookie cutter 30-year fixed, that maximum loan amount is $510,400. So anything over that amount would put you into the jumbo range. There is a conforming jumbo, but we don't have it available here in the Southwest Florida area because we're depending on Lee County or Collier County, it is different between the two counties.
Okay. And talk about that a little bit from a standpoint of some people want to maybe do a couple of loans. Is that an option these days?
Yeah, that's another product that we came out with recently, post, COVID crazy, like it was in March, April, where everything was locked down. We have what's called a home equity line of credit that we'll do in conjunction with a first mortgage purchase loan. So you do let's say you only have 10% down, you don't want to have mortgage insurance. So you can get an 80% first mortgage. We'll give you a 10% HELOC, and then you bring your 10% down. You'll have two mortgages. One of them you can get really aggressive on, pay it off much more quickly than the first mortgage, and you won't have the mortgage insurance. The one caveat to those is that the rate may be a little higher when you start what we call a piggyback loan. We piggyback a second on top of a first. The first mortgage rate might take a little bit of a pricing hit and be a little higher, maybe 1/8 to 1/4% higher. So that is one of the things you want to look at. Is it less expensive to do that long term, or is it just better to go 10% down and get mortgage insurance, pay it for a couple of years, 2-3 years, and then it goes away instead of having a higher rate for the life of the loan? So it's a great product to have, but sometimes it doesn't make sense if it's a long-term hold for somebody.
I love that you said that, because it's really, Peter, one of the things you do is help them find a product that makes sense for their financial needs, about what their long-term hold is.
Yep.
That's a benefit of one of the services that you offer for free.
Yes.
One of the things that, first-time home buyer wants to get in on a home, great community, the house needs a lot of rehabbing.
Mm-hmm.
You have a product for that, which I love.
Yeah, we have a couple of different products. We've got FHA, which is a Federal Housing Administration under the HUD program. They have a renovation type loan. It's a FHA 203K, and there's two different types within there. There's one where you have renovations under $35,000, and then there's one for over $35,000, which one of them, if you go over 35, there's a little extra work that needs to be done, or paperwork, documentation, things of that nature. And then Fannie Mae also has what's called the home style renovation loan. So it's the same type of program. It's a purchase rehab. You can buy the house, fix it up. You got to get it done within 6 months and then be in the house living in it. You don't actually have to live in the house for the time being when the renovations are going on. Nice thing about I believe it's the Fannie Mae loan, is you can build in your 6 months of principal and interest payments into that loan, so that if you have to live at another place and pay rent or something like that while it's being renovated and don't have to double up on payments, you can finance those payments for 4 months or 6 months, or however long you might need to be out of that property, and in two separate places, or have two separate places.
I love hearing that. We have a house right now, 58 Willoughby, that had some issues in it and would be perfect for this loan type. For somebody that's looking either for first or second home, but they want to be in a great school district with kids, and they can go in, remodel this house, and really make it their own, which I just love this product, all day long.
Nice.
Some of the things, though, that folks are looking at, is their loan, in the more the luxury market, being backed by their securities. Can you talk a little bit about that?
Yeah, there are some, typically it's not a product that we offer, but sometimes we'll have clients that they're asset rich and income poor, right? They don't have a ton of income, but they have a ton of assets. Well, a lot of, many asset fiduciaries will allow you to borrow against your portfolio. So sometimes it's they maybe don't qualify for a mortgage, but hey, why don't you talk to your, whoever holds your money in your IRA or whatever, and see if you can borrow against that? Because typically what happens sometimes is if you borrow against your IRA, let's say you have $1.5 million in there and you want to borrow 400,000 to buy a house, right?
Yeah.
You pay yourself back the principal and the interest. It goes to you back into your portfolio. You're not paying a bank or someone else. So, and that's just part of me being a loan officer, advising and giving my experience and my different ideas and thinking outside of the box, what's best for the client. I can't get them qualified for a mortgage. Well, what else can we help them figure out so that they can get into that house?
I love that. Now, right now, lots are hot. I think it was either CNBC or Fox News said folks right now are looking for privacy, they're looking for a pool, and they're looking for property, meaning a land, right? So single family homes and vacant land is off the chart in our market here in Southwest Florida. Peter, talk about, do you have some products that would help somebody with getting, maybe they want to do something with the land or they want to do something with new construction? Talk about that a little bit.
Well, we do have some new construction products. I don't have just a specific, hey, you can buy a lot and sit on it for 4 years type program. Not a lot of lenders such as myself, non-bank lenders, have products like that. Typically, if you're wanting to buy a lot and you need a loan, you're going to have to find a smaller local bank that kind of does that stuff. We do have their one-time close construction and permanent program, where it's a single transaction, and you can buy the lot as at closing. You can, part of the first draw is to pay off the seller for the purchase of the lot that you want to build on, and then you would start that construction process right away. So that is it's a nice product. We I think just rolled it back out. It has been suspended since the COVID thing started. But that's rolling out. And one thing I'm waiting for to come back online is a different product that we had. It was a similar type of product, but it was for builders and investors and people that are building spec homes. That we offer financing through a different program with one of our sister companies, Finance of America Commercial, where we'll open up lines of credit for builders or investors or spec home builders up to $10 million, where they can buy a lot, they can build a house, and then they can put it on the market while it's being built and hopefully sell it. So that's been a great product. I have quite a few builders that have lines of credit, and they've kind of been frozen for a while. They keep calling. I get calls all the time. Is it open yet? Is it ready yet? And I'm like, no. Like, we want to build. The market's crazy. We want to build some houses and sell them.
Well, the market is crazy, as you said. And, Peter, I loved how, one of your analysts talk about what they just said a little bit ago.
We have, I guess daily or weekly intercompany, webinars or meetings, and sometimes we bring in analysts. And one of the top analysts in our industry, the mortgage industry, him and his team, they feel like the housing market's going to remain strong for the next 5 years. So they think that homes will continue to appreciate, the buyers will still be in the market. And there won't be a shortage of business going around, which is going to help, obviously, the mortgage industry, right? If home sales continue to stay strong, then we'll be able to continue lending and make money and not have to find another job.
Well, I will tell you, I'm hearing the same thing. The housing market is bringing us out of this financial crisis. We can't do anything for the health crisis, but the financial crisis that hit last March. It is an interesting time, because what we do need right now is we need homes that are available to sell. So if you've thought about selling, make sure you contact us, because at the end of the day, our buyers are out there. They want to buy. Interest rates are great. Peter, tell everybody how they can find you.
Well, there's a couple ways. You can call me on my cell phone. I could give it out, but I don't know if I should. I'll give you my business number. It's 239-970-0090. Of course, that will forward right to my cell phone. So if I'm not at the office, I will get it on my cell phone. And you can reach me online at www.financeofamerica.mortgage.com/pprodnov. That is my web address. You can also find my email address on there if you want to get in touch with me that way. And anyone at the Bartos Group will for sure have my contact information as well.
Absolutely. We'll put that down below. We're drawing to a close. Peter, thank you so much for joining us today. Again, I'm Mary Bartos with the Bartos Group of Premier Plus Realty. and you have another episode of Really, Mary?
Really.